Hello everyone and welcome back. My name is Greg Furman and these are the market positions for November the 14th, 2017. Now to get started, we're going to begin with our first trade in the currency markets. We're looking at the New Zealand US dollar. Now what we're looking at here is shorting, again buying US dollars towards that mid-month cycle that I've talked about in this week's Forex Weekly Outlook. And we look at the repetitive signal that we can see that is again forming at the exact same time of the month. So when we look at last month, we're going to drag this over so everybody can see this. Excuse me. We look here right around the 16th of the month where the New Zealand US made a top here and our medium-term and long-term predicted difference crossed over to the downside. Now we're seeing the exact same signal forming now. So now here as we're coming towards the 15th, 16th of the month, we've got a top pretty much in place. We're breaking back down below that key VantagePoint 18-day predicted moving average at 71.57. That's where our key resistance line is, or just above that. So the medium term crossing over the long term predicted difference to the downside. Our neural index has confirmed that. But remember guys, we had this signal on Sunday in the Forex Weekly Outlook that it was posted for today. So when we look at this, our predicted RSI also breaking down below that very important 40 level. Now once again, a very repetitive signal. It doesn't mean for sure that the trade will work, but it certainly does point to the fact that it's very, very likely. Now, November is a very volatile month. There's no question about that. But when we look at combining these signals together and using that critical vantage point level of, 69.42, currently that comes in at 69.42, that is basically the line in the sand. All stops above the 70 levels. So once again, when we add the additional indicators from VantagePoint, we're just going to clear this off so everybody can see here. Okay, so we're going to clear that off. Then we go like this, and we look at our short-term crossover, which is to the downside. Medium term is still not down, and the long term is still not down either, but we can see that it is absolutely struggling. So for tomorrow, what we do is we now go to the daily report to fine-tune our entry point. So once again, with trading, the market's only trending 20% of the time, guys. Most of it's a day-to-day thing we do. So we're looking for a pullback to more towards 69.36. We're then going to target 68.74 on the initial move. But what I will point out here, guys, off this exact same signal last month, we moved from 72.50 all the way down to the 68 levels. So not only is this a good short-term position, potentially it could be a very good medium to longer term position, but most of your medium and longer term positions start with a setup very similar to this. Now our second trade for tonight is going to be in the US consumer non-cyclical. Now what we're looking at here is Dr. Pepper Snapple Group, the DPS stock. What we would look for here is to buy this particular stock again on a pullback. Now, what we can assess is that we have a fresh triple EMA cross. We're closing above that critical VantagePoint 18-day predicted moving average, coming in currently at 89.42. Our neural index is higher, but our predicted short and our predicted medium and long-term difference crossing above the zero line, firmly pointing higher. Now, the position of the predicted RSI 59.3, suggesting we're getting ready to push higher. Now, the non-cyclical sector doing pretty good here. I think the stocks are going to recover for the most part. When we look at our short-term crossover, we're moving higher. Our medium-term looks fantastic, and our long-term crossover is just taking place right now with a lot of activity around this $86 per share mark. So from here, guys, all we have to do is go into that all-important daily report from VantagePoint to fine-tune our entry point. So at 87.03 with our close, we're looking for a minor pullback tomorrow to 86.56. We're then going to target 87.59. Now once again, we're coming up, we've got new trend line support coming in at about the $85 per share mark, a little below there, about 84.70. Make sure all stops are below 84.70, and ultimately we would be looking to target back towards the $91 per share mark.